I'll go to the daily. It's pretty easy to look at. All right, so we'll take a fib of this drop. Well, 157 is important, but bear in mind 007 that we're coming off. How are you doing, by the way? Bear in mind that I'll get rid of this one here a second just to declutter things. Bear in mind that you're coming off a higher low after making a higher high. So we're actually anticipating it making a higher high, I would think. But where would be a zone we'd expect to see significant resistance? Yeah, I would think sort of through here. Okay, based on the fib and based on this stuff. Okay, so now we've got daily turning point areas. Now, do we know if this is going to do this? Could it do that? Could that do that? It's the Olympics. People are going to be saying, London, pound, I'll heart your fireworks. And sorry guys, girl volleyballers are not allowed to wear bikinis this go around. Because we're coming off higher lows, and we made a higher high with respect to the previous. So by virtue of us making a higher high and a higher low, we're expected to make a higher high. Lots of resistance at 57.20. Lots. And we'd expect a spot trade from there, but not a swing trade. At the moment, we're identifying major daily turning points, which are potentially going to give us swing trade opportunities. What I mean by swing trade opportunities is 200 pips. A trade where we're going to try and we're going to hold it for 36 hours. It will be a trend change on a daily, absolutely. But that doesn't mean to say we're not going to hold this major red zone and potentially do something like this. That could absolutely happen. Okay? So the reason I'm going to draw to a point here. I don't think I'm taking this webinar where I want to take it. So, okay. So these two red areas are potentially swing trade zones. There's one thing I noticed with my mentoring at Bootcamp is that a lot of traders think that every trade is going to be this monumental winner. Every trade they take, they expect 274.5 pips. And I'm here to tell you that 90% of your trades are 30 to 40 pip propositions. When you take your trades in massive turning point areas, those are the trades with lots of profit potential. So for me, this pound is not an exit until we hit 58.5 to 59. Okay? Swing trade zone. So here, you're potentially in a situation where we could do this. Why? Because that's a major turning point zone. Do I know that? No, not necessarily. Okay? Now, swing trade zone. So in other words, the shorts are potential holders. I don't know if it's going to make lower lows off of there. That's Sanjay. That's exactly what I'm saying. Now, everything in between here are spot trade opportunities. So in other words, everything in between, you're looking to take it to the next short-term level of support resistance. Right. So there are spot trade opportunities off these swing trade zones. So let's say you shorted or longed at 80 today here. Where would your spot trade target have been? The spot trade target would simply be the fib of this drop, right around 55.80. We exceeded that, that's fine. But the spot trade target would simply be a bounce of the support to the next short-term level of resistance. Okay? Now let's say hypothetically that price retraced here and came to about 56.40 and you longed it, what would your spot trade target be? Notice how now we're in spot trade zones. What would your spot trade target probably be? Yeah, the double top. The double top. Okay. Right, and then Asia is likely to make a little swing trade. Asia is likely to come down and push up again a little bit. So where would your spot trade target be there? Well, a swing fib extension of this, probably about 80 pips. Now let's say hypothetically that we press up here into London tomorrow, and you are sitting around 59.20. Okay, where would the spot trade target be? The spot trade target be? And what would the trade be? The spot trade target is honestly probably right around this sort of level. Probably trying to take it back to about 57.80. What do you think is going to happen then? Because now you're at a short-term level of support. Yeah, you're going to cruise all the way to the top. So guess what? You're in another spot trade. See here. Right, now you're at a lower high at what is potentially a turning point zone. Okay, now one of two things is going to happen. The market's going to do this and charge up, or we're going to do this, make a lower high and head down. Which one do you know it is? You don't know. You don't know. But when you short through here, what type of trade are you attempting? Swing trade. A swing trade, because if you're right, you're targeting down here. If you're right, you're targeting 152. And if you're wrong, you're probably going to go break even. And I'm not a big advocate of, hey, let me enter my spot trade with a 263 pip stop. No. Your swing trade is entered with your spot trade techniques. So your swing trade, you're just taking a normal spot trade with your normal 25 pip stop. You get it to break even, and the only difference is that you don't take profit. Why? Because you're in a major turning point zone. Oh look, I've just run into a swing trade.